Two people work the same job, same title, same hours, roughly the same salary. One of them has a baby, gets seriously ill, or loses a family member. The other one does too. One gets months of paid time off, job protection, and a clear legal right to return. The other gets nothing or close to it and has to choose between their health, their family, and their paycheck. Same job, completely different lives. The only difference is which country they work in. Paid leave policy is one of the starkest examples of how much the rules of work vary around the world. And the variation isn't random. It reflects deep differences in how societies answer a few fundamental questions about who is responsible for workers, what government is for, and what the relationship between employment and family life should look like. Before getting into why the rules differ, it's worth being precise about what paid leave actually covers, because the term gets used loosely and it covers several distinct things. Maternity and parental leave covers time off around the birth or adoption of a child. Paternity leave covers time specifically for the non-birthing parent. Sick leave covers personal illness or injury. Family or caregiving leave covers time needed to care for ill relatives. Bereavement leave covers loss. Some systems bundle these together. Others treat each category with entirely separate rules. The key word is paid. Unpaid leave exists in many countries as a legal right, a guarantee that your job will be held. But unpaid leave is only useful to workers who can afford to take it. For most people, the financial replacement is what determines whether they can actually use the time they're legally entitled to. A right you can't afford to exercise is a limited right. How the payment is structured also varies enormously. In some systems, the employer pays directly. In others, a social insurance fund pays the worker. In others, some combination of the two applies. That structural difference, who writes the check, turns out to matter a great deal for how the policy works in practice. The deepest dividing line in paid leave policy globally is this: is paid leave a social insurance system, or is it an employer obligation? In much of Western Europe and in many countries with strong social insurance traditions, paid leave is funded through payroll contributions from employers, employees, or both, into a collective fund. When a worker takes leave, they receive payments from that fund, not directly from their employer. The employer is obligated to hold the job. The cost of income replacement is socialized across the whole economy. This model has important effects. Because the cost is spread across all employers and workers, no single employer is heavily penalized for having an employee take leave. A small business doesn't face disproportionate financial strain when one of 5 employees goes on parental leave for 6 months. The risk is pooled. In countries that rely primarily on employer mandates without social insurance backing, or that have no federal mandate at all, the cost lands directly on individual employers, and that changes the calculus. Employers, especially smaller ones, may be more cautious about hiring workers they perceive as likely to take leave. The cost isn't invisible or distributed. It's specific, immediate, and attributed to a particular person. This isn't just theory. Research has looked at hiring patterns and found evidence that employer cost models can affect employment outcomes for groups perceived as more likely to use leave, particularly women of childbearing age. That's one reason many policy analysts argue that social insurance funding is more equitable than direct employer mandates, even when the nominal entitlements look similar on paper. To understand why countries ended up with such different systems, you have to understand path dependency. The idea is straightforward. Early policy choices create institutions, expectations, and political constituencies that make switching to a different approach increasingly difficult over time. Countries that built strong social insurance systems in the early 20th century, often through labor movement pressure, social democratic politics, or post-war reconstruction, created administrative infrastructure, contribution mechanisms, and cultural expectations around state-provided social protection. Paid leave expanded naturally within that framework. Countries that developed welfare states later, more reluctantly, or more focused on means-tested poverty relief rather than universal social insurance, ended up with patchwork systems where paid leave depended heavily on employer generosity, collective bargaining, or nothing at all. The United States is the most cited example of the latter. The federal government provides no universal paid parental leave. The Family and Medical Leave Act guarantees up to 12 weeks of unpaid, job-protected leave, but only for workers at companies above a certain size who have worked long enough to qualify. Individual states have moved ahead with their own paid leave programs, creating a patchwork where entitlements depend heavily on where you work and live. Why hasn't the federal system changed? Partly because of genuine political disagreement about government's role. Partly because employer groups have consistently opposed mandates. And partly because the absence of a universal system means there's no existing administrative infrastructure to build on, creating a chicken and egg problem where reform requires building something from scratch rather than extending something that already exists. Paid leave policy is inseparable from gender politics, and the design choices around parental leave in particular reveal a lot about a society's assumptions. Early maternity leave policies were often framed primarily around maternal and infant health, protecting the birthing parent and the newborn. That framing, while well-intentioned, reinforced an implicit assumption that childcare is primarily the mother's responsibility. Fathers weren't expected to take leave. Employers weren't expected to offer it to them. The social norm was that the mother steps back from work, the father doesn't. Many countries have deliberately tried to redesign parental leave systems to push back against that assumption. The key mechanism is use it or lose it paternity or shared leave, a portion of the total leave entitlement that cannot be transferred between parents. If the father or non-birthing partner doesn't take it, it disappears. The logic is that optional shared leave doesn't move behavior much. If fathers can take leave but don't have to, most won't. Either because of workplace culture, financial pressure from being the higher earner, or social expectation. Dedicated leave that expires if unused changes that calculation. Scandinavian countries pioneered this approach, and evidence suggests it has shifted both behavior and workplace norms over time. When taking parental leave becomes normal for all parents, the penalty that women disproportionately faced in hiring, promotion, and pay is somewhat reduced because the leave taking is no longer a signal specific to women. But this approach requires a degree of policy engineering and political will that many governments haven't applied, and even where it exists, cultural change moves slower than legal change. Parental leave gets most of the attention in policy debates. Sick leave is quieter but arguably affects more workers more often. The variation globally is substantial. Some countries mandate paid sick leave from the first day of illness. Others require waiting periods, 1, 2, or 3 unpaid days, before sick pay kicks in. The logic of waiting periods is to reduce minor absences on the theory that workers will push through a short cold rather than take a day off. Whether this actually works as intended, or whether it mainly keeps genuinely ill people at work where they can spread illness to colleagues, is debated. The COVID-19 pandemic brought this debate into sharp focus. Countries and workplaces without adequate paid sick leave found that workers came in ill because they couldn't afford not to. This wasn't a failure of individual judgment. It was a predictable consequence of policy design. When people face a choice between their income and staying home, many will choose income. The health consequences of that choice extend beyond the individual. Coverage gaps also matter enormously for sick leave. Gig workers, part-time workers, temporary workers, and the self-employed are excluded from sick pay entitlements in many systems. These tend to be among the lower wage, less financially stable segments of the workforce, precisely the people for whom a few unpaid sick days create the most financial hardship. Any honest account of paid leave policy has to engage with the employer side of the argument, not because employers' interests automatically outweigh workers, but because the practical implementation of paid leave runs through businesses, and their capacity matters. Large employers in competitive labor markets often provide paid leave well beyond legal minimums, because attracting and retaining skilled workers requires it. When a tech company or a large financial institution offers generous parental leave, it's responding to labor market pressure as much as legal obligation. The policy debate at the top end of the labor market is relatively settled in practice. Generous employers offer it, workers expect it. The harder question is what happens at the bottom. Small businesses operating on thin margins in sectors where workers are more easily replaced face genuinely different constraints. A small restaurant, a local retailer, a family-run service business. These employers may not have the operational flexibility or financial buffer to absorb extended leave periods, even with social insurance picking up the wage cost. This is one reason the social insurance model matters so much. If leave is funded through a pooled fund rather than directly by the employer, the operational challenge of backfilling a role remains, but the financial penalty is reduced. Pure employer mandates without this backstop do tend to create more resistance, particularly from small business groups, and that resistance has political consequences that shape what gets enacted. Paid leave policy has been studied extensively, and some findings are fairly robust. Others remain genuinely contested. On the positive side, research consistently finds that paid parental leave is associated with better infant health outcomes, higher rates of breastfeeding, reduced infant mortality in some contexts, and better maternal mental health. These are not trivial effects. They represent real differences in children's early development and in families' well-being. Evidence also suggests that adequately paid leave increases return-to-work rates for mothers compared to unpaid leave, which makes sense, since workers who can't afford to stay on leave come back sooner or don't take leave at all, even when it would benefit them and their children. On paid sick leave, evidence from places that introduced it suggests modest reductions in workplace illness transmission, lower emergency room use for conditions that would otherwise be managed at home, and no dramatic negative employment effects. The contested areas involve optimal duration and replacement rates. Very long leave periods, several years as exist in some countries, may reduce labor force attachment for primary caregivers over time, which has implications for lifetime earnings and career progression. The sweet spot, if there is one, is somewhere between the nothing or almost nothing end and the very extended end, But exactly where is genuinely debated and probably varies by context. Paid leave policy tells you a lot about what a society believes, about whether raising children is a private responsibility or a shared one, about whether illness is a personal risk or a collective concern, about whether the relationship between work and life should be mediated by the market, the state, or some combination of both. The variation around the world isn't just administrative difference. It reflects genuinely different answers to those questions. Answers shaped by history, politics, labor movements, business lobbying, cultural norms, and the path each country happened to take decades ago. What makes this particularly consequential is that paid leave policy affects not just individual workers, but long-term outcomes. Children's health, women's labor force participation, workforce stability, and public health. The stakes are higher than the policy debate usually acknowledges. What you shouldn't walk away thinking is that the variation is simply a matter of some countries being more generous than others, as if generosity were the only variable. The design, who pays, how it's funded, who's covered, how long it lasts, whether it's universal, matters just as much as the headline number. A nominally generous entitlement that's poorly funded, excludes gig workers, and penalizes small businesses for using it is a very different thing from a well-designed social insurance system that spreads costs and genuinely supports workers when they need it most. The rules are different everywhere because the choices behind them are different everywhere. And those choices are always, in the end, political.